Right, everyone, happy Friday. Welcome to Fundamental Fridays, where I'm going to break down this exciting week we just had in the markets based on Federal Reserve interest rate cut expectations. We've seen the US dollar getting weaker, stock markets breaking to record highs, gold just broke above $2,500 an ounce, Bitcoin's moving, and it's all down to the bond market and the Federal Reserve interest rate cut expected next week. Okay, I really hope you enjoyed this video. We're going to break down a lot of market moves fundamentally, which I hope can help you with your trade. So tune in and enjoy this episode. All right, everyone, warm welcome to Fundamental Fridays. It's been a very, very interesting week, and I'm going to break down the fundamentals that have been driving the currencies, stocks, crypto, and commodity markets. So stock markets rallying to all-time highs because the markets are predicting the Federal Reserve starts cutting interest rates at the September meeting next week. The dollar continues to roll over and weaken as these interest rate cuts come into play. Gold breaks above $2,500 an ounce on these interest rate cut expectations, and Bitcoin is surely to rise alongside, as we see today, gold and stocks, because they all move together based on lower interest rates. Okay, so let's break down what's happened. Okay, and I'll show you in the headlines what we've seen, and then I'm going to show you over here actually how all the members in my private VIP have sent me their results. Samuel made 5,000, Jade made 250, James made £700 following the trades. I'm going to walk you through all these trades we've been taking. This member made £3,200. Ryan made 4,800 profit on his account. So many amazing trades to share with you from the members. So stick behind to the end of the video because I want to show you through the exact trades that we've been taking as well. Okay, but let's start off with just by breaking the fundamentals down for what we've seen. I want to walk you through the headlines because the headlines will give you a clearer picture as to what's happening. Stock rotation is back on bets Fed will go big, markets wrap. Okay, Wall Street's revived prospect of a half-point Federal Reserve interest rate cut next week, spurring rotation into stocks that would benefit from policy easing. Why would stock markets keep rising if the central bank cuts interest rates? Well, it's really simple. Take a look at the 10-year government bond, okay, which is the benchmark, and it's very, very important that drives stocks, crypto, and gold, okay? The 10-year government bond is very important because interest payments on mortgages, credit cards, car loans, student debt are pegged above the 10-year rate. So when the interest rate on government bonds are declining because the markets currently are pricing in rate cuts, so this is the spreadsheet that I share with my course members, so you can see where the Federal Reserve interest rate is going to be at meeting by meeting. Look, it's gone from 5.5%, and right now it's being priced in by December next year. Rates are going down to 3%. That's 2.5% rate cuts in America. So the bond market is pricing that in. So as interest rates on government bonds are going lower because we're expecting rate cuts, look what's happening, okay, in the stock markets. You can clearly see when the interest rate on a 10-year government bond hit its peak back here in October 2023, and it's been steadily declining, stock markets have been booming. Why? Lower interest payments on a 10-year government bond means your mortgage payments go down every month. Your car loan payments, your student debt, your personal loan, business loan payments are going down. What does that mean? People have more disposable income to spend. Who benefits from that? Stocks. Because the companies within the stock market, their earnings are going to go up. That's why this headline is telling you there's a rotation back into the stocks that will benefit from lower interest rates. That's why the stock markets are now reaching back to record highs. That's why I'm in the stock market trades with my members, because we're going to profit from lower interest rates. Whenever interest rates go down throughout history, stock markets take off for that exact same reason. It drives the earnings of companies when people can borrow money cheaply and their interest payments go down, so there's more room to spend. Okay, so there you have it. The 10-year government bond is the most important interest rate indicator to look to see where stock markets are going. Okay, clearly right now, the interest rate's on its way down, and the 10-year government bond interest is going to keep going lower because interest rate cuts are coming in sharp by the Federal Reserve. Okay, now, how does that relate to gold? Well, look, guys, have a look at the headline here. Why is gold breaking out to all new time highs? Why are we taking the gold trades, which I was just showing you in the members' results? Here's the headline. Gold hits successive record highs ahead of expected interest rate cuts. The headline says it all. Gold rose to another record high, building on Thursday's surge of nearly 2% as traders added bullish wagers ahead of a widely expected Federal Reserve interest rate cut. So why does the 10-year government bond interest rate also drive gold prices? Well, it's really easy to understand. Investors, when they can't get enough interest in government bonds to protect them from inflation, what do? They buy gold. So what you've seen here is, look what happened when the Federal Reserve first started raising interest rates in March 2022, at this period of time here. Look how much gold got hit. Okay, look, here's a 10-year government bond. Look, when rates started to go up here, you saw this big appreciation in the interest rate paying on the 10-year government bond. Gold's price slumped during that rally. And when interest rate payments on government bonds starts to decline, gold will jump up. And then when interest rate payments then start to go up again, gold, as you can see here, will go lower. And just as I showed you in the previous video, when interest rates on government bonds hit their peak and started to decline, that's when gold took off with stocks at exactly the same time. Look, you can see the correlation. Stocks and gold took off at the same time. Why is that? Well, just think about it. If you borrowed money to the US government back in October here, you was getting paid 5%, right? 5% interest. If inflation goes back down to 2%, well, you're still making 3% interest on your money. Your money's protected from inflation. But the lower and lower that interest rate goes, the less protection you have from inflation. Now it's only around 1.6%, over 2% inflation. And if inflation goes, and if the interest rate keeps going lower, there's less and less protection over inflation. So investors would rather buy gold when your interest payments protecting you from inflation go lower. They'll buy gold, which may shoot up by 40%. Now you don't give a shit about a 2% interest payment on bonds. You'd rather buy gold. Gold is a hedge against inflation. Hence why, historically, when interest rates go lower, gold goes higher. Okay? And that's what you're seeing right now. And when I show you the members' trades that we've been taking, that's why we bought gold. Okay? And as you can clearly see here, we bought just here, just before the jump in price. I'll show you here. And this is exactly why we got into the trade. When I shared it with the members over here, I said to the members, we're buying gold. Look, we got in at 1507 just before it took off. And it was because the headlines told me about the rate cuts coming. And it was basically spurred on by the inflation data this week. And it was the perfect time to buy. Boom, in the trade. Takes off. Now, Bitcoin goes up for the exact same reason. Okay, look at what Bitcoin did with gold and stocks. Bitcoin's price rallied when interest payments on government bonds also started to decline. Just think about it logically. Why? Lower interest payments on your mortgages, credit cards, car loans, student debt payments mean there's more disposable income going into crypto. There you have it. When interest rates go down, crypto takes off. Hedge against inflation. That's why I'm buying stocks, crypto, and gold with the members, okay? So when I'm showing you all their results over here, look at some of their crypto results. You can see all these crypto results by the members' Bitcoin trades. Some of the members making 1,000 on these trades. They're following the same trades I'm sharing with them because of the expectations based on lower interest rates. So this member's making 3.5 grand, for an example. This member's making 4,500. It's all down to the fundamentals why we're taking these trades, okay? It's really important to understand what drives markets. So we've got Bitcoin going up, gold going up, stocks going up, and we've been selling US dollar JPY and profiting from the dollar getting weaker for the same fundamental reason. When interest rates are going lower in America, it makes the dollar less attractive to investors. Okay, so the 10-year government bonds rolling over, going lower, the dollar's getting weaker at the same time. Now, this is more down to the carry trade. If you understand the carry trade, you understand exactly what hedge funds are looking at. If interest payments in America are 5.5% right now, and if you sell the yen to buy the dollar, currently, you sell the yen to buy the dollar, you get paid 5.5% interest when you buy the dollar against the yen over 365 days. If you're a hedge fund taking that 1,000 lots, you'd be making 150 grand every day in free interest into your trading account. Okay, so as the Fed kept raising and raising rates since March 2022, or in this period here, this is why dollar yen was taking off from exactly the same time, because the higher the Federal Reserve interest rate went, okay, and you can see the bond market is driving USD JPY. Look, as rates go up, dollar yen goes up. As interest payments on the right hand side go down, look at dollar yen on the left hand side, it goes down. When interest payments go back up again, on government bonds, dollar yen takes off. When it declines, dollar yen goes lower. When it goes back up again, you see the correlation, okay? And now the bond market's rolling over. So what does this mean? It means that investors who'd been holding this trade, cashing in on the dollar getting stronger the whole time, making 40% appreciation on the dollar, plus the 5% interest, this overnight carry trade, free money coming to the account is coming to an end, because if rates in America go down to 3%, look how much your daily interest payments go down by. A lot, nearly half. Plus, that 5% interest you're making over 365 days only pays a profit if the currency pair doesn't fall by 12%. You've now lost more money on the exchange rate going against you than you did from the interest. So it's called the unwind of the carry trade. That's why I'm taking the USD JPY trade with the members. And you can see, look, they're all cashing in on the same trade. That's what we're doing. Okay, so next week, we got an important week, and you should tune into Market Watch on Monday. I'm going to break down the week ahead. But there you have it, guys. Fundamental Fridays. Now you understand what's going on. We're making big profits. Come and join the course, members. Get educated. Okay, we've been breaking down the markets in a lot of detail for all the fundamentals driving the markets. And I'm looking ahead to next week to get an eye on the economic data to know what to do in the currency markets, stocks, crypto, or commodities. Okay, please like, comment, subscribe, leave a comment. Tell me what you're trading right now, because it'd be good to hear from you guys. But if not, see you on Monday.
So, yes,